Thank you for joining us. Welcome to Business Incorporated. I'm Chimezie Obi Iwago. On the show today, Nigeria's Purchasing Managers Index declines marginally by 0.2 points at 56.8 reading in July. Societe Generale and BNP Paribas are among banks exposed to Ivory Coast's largest domestic cocoa exporter. Plus, Rwanda looks to new markets as Trump suspends its duty-free status for clothes imports. We'll begin here in Nigeria as the Purchasing Managers Index released by the central bank shows the manufacturing sector declined marginally by 0.2 points at 56.8 reading in July from 57 in June. The CBN report shows 13 out of 14 subsectors reported growth for the period. However, the composite PMI for the non-manufacturing sector stood at 57.7 points in July 2018, indicating expansion in the non-manufacturing PMI for the 15th consecutive month. Business activity, employment level, and inventories grew at a faster rate, while new orders grew at a slower rate in July 2018. And to the markets now, the Nigerian stock market pointed to a negative start the first trading day in August. The index was down 0.78% at intraday, and other numbers shows the JSE index and EGX 30 in Egypt being upbeat at intraday. The JSE index was up 0.09% and Egypt had performed by 0.72%. Kenya closed down by 1.06% on Tuesday. And in the Middle East, only Abu Dhabi faltered during the trading day by 0.29% at intraday. Now, the rest of the region were upbeat the first trading day in a new month. Dubai was up 0.76%, Qatar led gains by 1.54%, and Saudi was up marginally 0.02%. And to Europe now, bourses traded mixed in early trade as optimism over earnings was offset by trade tensions. Also, investors' attention is on the U.S. Federal Reserve, which will publish its latest interest rate decision at 2 p.m. Eastern Time today. Now, let's talk to my colleague in Frankfurt, Paul Brits. Hello, Paul. Good afternoon. It's midweek.
Hey, Jimmy. Good afternoon.
Good afternoon. Well, the U.S. Fed will today announce its rate decisions. Would Powell & Co., be the decision by Powell & Co. be a mirror for other central bankers like India and the Bank of England?
Well, lots and lots of central bank decisions this week as we cross into August. But central banks trying to figure out, is it time to go up with their rates? Are they ready to move out of crisis mode? And mostly the answer has been yes, or is expected to be yes. Rates are going either up or they're kept at least stable. The exception is the Bank of Japan that was expected to raise its interest rate, but didn't touch that. It also didn't touch the 10-year yield bond buying, although allowing a little more flexibility in its buying program. The Reserve Bank of India today came out with its second rate hike in a row, so that's 2 months in a row, going to a rate of now 6.5%. Still, its outlook, underlined, is neutral. It is trying to keep inflation in the mid-time range at about 4%, while still allowing for economic growth. Right now, though, the inflation rate is at 5%, so there's still work to do there.
Well, while the central bankers take a decision on the rates, how much of the new global trade tensions ignited by U.S. President Trump is already feeding into companies' earnings that are currently on the trading board?
Well, the trade war is, of course, or the trade conflict flaming up again, and then there's signs that the two parties are talking to each other. There's conflicting information here, but the 25% have scared people, definitely. You mentioned the purchasing manufacturing index. That is on a 3-month low in the UK. It's also low in the Eurozone and in China because people are worried, of course, the materials are going to get more expensive. Steel producers, on the other hand, they are profiting from this trade conflict that is going on because steel prices have been up. And demand in the US is also strong. Today, ArcelorMittal came out with its numbers, and both demand and prices were up, allowing the company to make $20 million in revenue, and profits were up 45%. Similar picture in Germany, where Klöckner & Co. had its best quarter in 7 years, and mostly they've been doing their business in the US. Of course, they've previously bought steel at better prices and can now sell their product at higher prices in the US. That's not going to last forever, but for now, they are profiting from this, definitely.
Okay, Paul, let's talk about the world of smartphones, the battle between Apple, Samsung, and Huawei in terms of sales, market shares, and earnings, even as Apple's iPhones at $1,000 looks likely.
Yes, the Apple's iPhones have gone up in price, but another news made the rounds today, and that is that Huawei has kicked Apple down from the second position of phone sales, of smartphone sales. This is the first time in 7 years that it's not Samsung at the top and Apple on the second, or the other way around. So that's really something new here. Why is it so important? Because 3 years ago, hardly anyone knew what Huawei was doing, and they've been able to enter that market very, very quickly at a very strong pace. How did it do that? Well, if you look at phones, most of them look the same today. They're all block phones. There's not very much special going on with them, and those don't have to come at $1,000. They can come at cheaper prices. And that's exactly where Huawei went in. It sold a lot of its Honor brand smartphones outside of China and was able to gain 15% of the market now. So we've got Samsung at about 21, Huawei at 15, and Apple at 12. Apple was still able to post stellar growth figures because of that higher price, of course, and because it is able to tie its customers to its brand. They're very loyal to the brand, and even that high price didn't scare people off. This quarter is supposedly one of Apple's weakest quarters, but it was still able to rise profits to $11.5 billion and a 17% year-on-year jump in revenues. And that's because it's been able to also expand in accessories. So that's its notorious earbuds and the smartwatches that are selling faster. That sector grow by 60%. Apple has managed to tie people to its brand, and so it is eyeing that $1 trillion valuation. It still has to rise a couple of percent in the market if it wants to hit that, but it is eyeing that $1 trillion valuation in the stock market.
Well, I see the power of competition playing out there. Thank you very much for your time, Paul. Enjoy the rest of the day.